Hey, welcome back to Two Super Guys Trade Stocks. I am Dylan.
And I'm Vinny. And in the most epic of flip-flops, Dr. Michael Burry now comes out and says that he was completely wrong 2 months ago to say that we should sell. Does that really mean buy? I don't know.
Great.
Two Super Guys Trade Stocks.
All right, pretty wild. This is not exactly what he wrote here. This was his actual tweet from yesterday. I was wrong to say sell.
What an ass. That dude who calls him an evil gnome constantly and everything. Yeah, he's right. He called it.
Hey, you know what? I would like to extend the olive branch and invite Michael Burry to honorary be a Two Stupid Guy who trades stocks from the YouTube.
Three.
Three
Yeah.
stupid guys at that point, I guess. Or are we still two because we're so dumb we can't count to three? That's the real question.
It's definitely pretty rough. He do you have the tweet where oh yeah, it's later. Sorry.
Yep. Yeah, this is the tweet where he originally said sell. I'm going to show you what the market's done since he put out this epic tweet about selling stocks at that point in time. So this is SPY. Honestly, it went down a little bit further. It came back up. It's almost flat, within about 1% of where it was on the day he issued that tweet. Within a margin of error. But if you're really looking to be aggressive and thinking that it's going to be a major downside, obviously he was wrong about that. Nasdaq has had a complete opposite here. It's up almost 9% in that time period. Ridiculous, ripping your face off, right? Maybe he should have said, sell like old companies and buy tech. Maybe that was what he actually meant. No.
So, tech has gone down quite a bit, and then financial followed. If you look at the charts, it does not look like it's going to stop. It looks like it's going to continue for like quite a while. So.
Yeah. Interesting. All right.
Correct.
Yeah. My go-to channel for kind of looking at this sort of stuff is figuring out money. And, he's been saying the same thing. He's like, this trend really is starting to look more solid. You're starting to see a lot of market indicators that are ticking over and putting in like a kind of a turning point. But, there's still some major kind of historical indicators that have been like, I don't know. I don't feel so great about it. But
we're going to talk about why those historical indicators don't matter anymore.
This is exactly true. This is pretty wild stuff. Like, Dylan and I were talking about this video, and I'm literally thinking like my concept of valuation is probably just extinct, if you will. This is where you get into that trend where it really doesn't matter anymore. So this is another tweet he put out right out of the same time period. Do you know what BTFD means?
Buy the fucking dip or ruin Dylan's account.
Yes, exactly. Screw your puts. Okay, that's what that really means.
They're
basically.
dead.
But this basic trading strategy where stock dips, if you buy it, it's going to be up the next day. He's showing a chart of that over time and how it's been massively effective for the last generation, if you will, since like the 2000s or so.
Yeah,
only a couple of down years.
It's pretty disgusting. And we're going to talk about why. Kind of the historical, like the Buffett indicator, all that stuff I don't think it works. And I'll be the first to say I'm wrong. Like I really thought we were going to go lower. It doesn't make sense for us to be up this high, especially we have a video coming out looking at valuations of some tech stocks right now. It makes zero sense, but also doesn't have to, because if everyone buys, it goes up.
Yeah, very true. The market has really changed. This was a chart that Dylan shared with me that I had heard some inklings of it, but I didn't really realize like just how broadly this had switched.
So this is disgusting. This is why these old indicators are most likely dead. Okay, and I know that's a wild thing to say. I get it. Here is essentially retail investor volume of shares. Okay, so you go back to 2011, you're hanging around 10%. 1990s. You're around 5%. So just to consider what that means, it does kind of make sense. It was like $5 to make a single trade back then. It was not as handy. Robinhood and Schwab on your phone was not a thing, right?
Yeah.
So essentially back then, 1 in every 20 shares traded was retail traders. You're not going to get a lot of leeway. Now it's 1 in 4. Put a pause there for a second. That's a disgusting change. That is so much, right? 1 in almost 4 shares are coming through retail and not traditional institutions, which is why a lot of these valuations kind of don't matter. And probably the best example of that is Tesla, because people who have been saying Tesla's overvalued since 2017, I doesn't matter because everyone keeps, I agree with you, but it just doesn't matter because if people throw money into it, people decide what the value is, not financial metrics, weirdly
Yeah.
enough. So
I I get completely what you're saying. They're voting with their dollars, and their dollars say it's worth this to them. Just to mobilize the buy the fucking dip thing, you can get it on a coffee cup with Warren Buffett because he probably said that.
probably, absolutely,
Probably.
100%. He will now.
Yeah. Speaking of Buffett, okay, so I've used the chart like this Buffett indicator before. This is generally just designed to show relatively how over or undervalued or relatively valued the stock market is compared to the broad U.S. economy. And within one standard deviation right now, so we're like 160%. So we're above the historical trend line. However, we're within the standard deviation, meaning about 68% of the time the market should be within this trend. In reality, when you're talking about something that's this big, it usually tends to be even more so concentrated around the middle than the typical standard distribution. But it's in the spitting range of like what you kind of would think of as far as market valuation. I was really hoping we would get to the point where we were undervalued by a standard deviation, like
Same.
we did back here during the dot-com bubble, because then I'm still in that kind of stock accumulation phase of my life, so that's what I was really hoping for some great deals, right?
Same. I was thinking I was going to get Apple around 80. What an idiot.
Yeah,
What an
well,
idiot.
you never know, but the kind of trend is starting to fade a little bit here. This is another kind of broad indication of market valuation, and you can see how it's shifted over time from a baseline perspective here. When you were talking about, when it was more kind of institutional investors and hedge funds and kind of mutual funds, the PE historically was hanging around this 15 level, right? And now, since we've had that dot-com bubble, we've been hanging out like 20 seems to be more of our baseline since then. People, is 20 years long enough to say that it's set a new standard, or will it someday revert back to that? I don't know.
Tech moves fast. You don't go backwards. I don't think we're going back.
Yeah.
Because
All right.
you don't have to use numbers. It doesn't matter. Right?
Yeah.
There's a lot of, show that one thing you got. There's a
Yep.
lot of examples of, I remember like 6 years ago, MU did an earnings call and it could not have beat any better on every single metric, just like lost
Hmm.
6%, just because people were like, well, I'm going to take my profit and leave.
Yeah.
It's weird, but that's how it is.
So, although this isn't directly correlated, because we're talking about the frequency of transactions here, as opposed to the actual valuations of the companies and that sort of thing, but look at how divergent these two like kind of phases of this chart are. To the left of this dotted line, to the right, like those things don't look related at all, right? To the left of the dotted line, we have when you had to pay traditional kind of commissions to trade stocks. Right?
Yep.
This was even in the day of the low cost broker where you're paying $7 for a trade, right? Now all of a sudden we get to this right side of the chart where we're in this phase where you no longer have to pay for the transaction up front, right? Remember, if you're not paying for it, you kind of are the product. People would talk about dark pools and get into that sort of stuff and payment for order flow. But look at how divergent that is. Just the volume of like these transactions has just exploded. It's insane.
It's pretty disgusting. Retail traders have significantly more power than we previously had, and that's not just in like bankrupting like one institution who's crazy short on GameStop. It's across the board. Evaluations are completely inflated, and like I agree. I think our new average is 20. You don't really go backwards. I can't imagine in an area of free trades and everyone with I don't want to say more money, but an easier ability to get money in our current market with more jobs. I can't see people being like, "Oh, this is overpriced. Let's wait till it's around 10 instead of 20." I don't think it's going to happen.
Yeah.
I think that's a thing of the past.
Yeah. I mean, patience definitely isn't there anymore. So, Dylan, with all this kind of data, yeah, I know you're looking at. You want to talk about the charts first, and then talk about what you're doing as far as like your shorts. We can do that.
Well, so I'll tell you. So I have puts for June 16th canceling. They're dead. They're not dead. They're most likely dead. I lost 5,400 on those as of right now. If I were to sell, I could choose to lose 6,400 total, or just wait and I don't know, maybe something happens and it goes down and I can recover something. So
Yeah.
we'll see
All
what
right.
happens. I still have the other ones for January next year and June of next year. I'll have to see what I want to do with those. The SPYs right here. This is the 100 moving average. This is the 200. We are still within in between them. So this is a weekly chart, by the way. This is a very, very long-term chart. Usually when you're in a bull market, you're above both of these, right?
Yeah.
So we're actually still in between them. 419 is the number coming up to it. Now, if you look at this on a daily chart, dude, I mean, the SPY is not as dramatic. The SPY looks like we're still choppy, but the Qs, dear God, I mean, it does not look like it's slowing down. It looked like we're going to hesitate here a little bit, up
Yeah.
15 points. The weekly thing is the same. We're coming up. Don't mind the dotted line. It just means I need to go back. We're coming up to the 100 moving average, and it's narrowing. So we'll see what happens. Logically, we should not be in a bull market. I think we're in a bull market. So it is what it is, man. When you're
Yeah.
wrong, you're wrong.
I know, right? Well, I'd love to hear what your thoughts are down in the comments below. We'll catch you guys in the next one.
Later, guys.